Welcome back to Pete's Investing. In today's episode, it's a special request made for a friend, and we'd like to look at the following stocks for ANZ in Australia, the ANZ Bank, the Bendigo Bank in Australia, Challenger Financial, and Telstra. So, as always, we're not recommending you trade any of these. It's simply an educational video. And don't forget also to click on the Pete's Investing channel. And that's where we store all our share price blue chip share reviews every week on this playlist. We also review special indices across the world for Australia, US and Europe and China, and also for gold. And this is where we actually store all our strategies, which you can reference in terms of how we trade, the buy and sell strategy, the averaging down strategy, and money management. So let's get stuck straight into it. So basically, we're looking at the ANZ Bank first. This is our 18-month horizon. And for those new to the channel, this is a price chart. This top chart up here illustrates the profitability on our buy and sell strategy. Again, look at those, refer to those strategy videos I mentioned a minute ago. This price chart, this profitability chart shows the where you buy the same number of stocks back here. As you can see, it's a solid blue line. We bought 74 shares for the ANZ Bank back here. That was back around about August in 2019, and we haven't sold that. So that shows your profitability, and it just broke even above our $100,000 mark. We're using $100,000 as a baseline to allow for the software to drop below that should it go into a negative territory, and then it breaks above. So actually, had you bought the 74 shares back in August 2019, and you hadn't sold them, you would have been making about $82 profitability over that roughly 18-month period. This is our buy and sell strategy profitability. So you can see here the COVID crisis hit, and both were impacted there. The difference is with the buy and sell strategy, we're averaging down, and we added to our positions there. And that is indicated by that black arrow. We added to our position. So we bought back here, we had initially 150 positions. We bought another lot of shares there to 277 positions, and we ended up selling them there. So as you can see there, it broke above our baseline at a profitability of $438, and today we're sitting at $764. And that's the approach we take for each of these charts as we progress through these. Again, referring to our strategy, we're looking at the CCI indicator, and this little chart here shows the profitability, or where we want to get out, or in terms of exit strategy. So we're looking at 28 points above on average. So overall, the ANZ Bank's not doing too badly versus the buy and hold strategy. Next, we'll look at the Bendigo Bank. As you can see here, the overall profitability is $550 versus the buy and hold, we're down about $200 worth. And just look down into the what's happening in the last few days or weeks. You can see there the profitability rising up, and it's actually coming back to a potential break even there. You can see there the profitability opened up. Move the cursor there. It opened up at $443, and it's currently sitting at $550. So it's actually doing about $100 from where we opened up. Challenger Financial, or Challenger Limited. Unfortunately, the chart here doesn't show a full history on the Challenger chart, so the profitability on both buy and hold and buy and sell is very similar, because we don't have enough history of it. So I'm not sure why the CGF chart doesn't show up for that one, for this software. So it's not a really good indicator of the profitability in a longer term for that particular chart, so I can't really comment on that one. And again, we're looking at 15-minute charts for each of these. And lastly, for Telstra, looking at the 18-month horizon, you can see there Telstra's been going sideways in a downward motion for most of the period. The buy and sell strategy is making $472 over the 18-month period. and the buy and hold strategy is down about $200 as well, similar to the ANZ. And looking at the longer and the shorter term period, the last few days, it's actually been doing quite well since middle of March. It's been appreciating, and as you can see here, it opened up back here with the initial entry, and each of these arrows indicates where we buy more to average down our price. And it's sitting at currently at $472. And in summary, that's what it's done for those shares. The dividend yield's been taken from Yahoo Finance with the ex-dividend date that's either been paid or due to be paid. And as you can see here, the dates that those dividends were paid, and a profitability summary over the 18-month period. So the profitability overall is $17.80 for the four stocks, and that works out over the roughly 17-month period, $102 a month on average. The maximum drawdown is the amount of where the price goes against you. So looking at Telstra as an example, 16.24. So that would have been from the highest peak, probably at this point here, down to that low point there. That would have been the drawdown. So it's basically what you would have gone into the red at the maximum drawdown for that particular period. That's how we calculate the drawdown. The software calculates it for us. Just very quickly do a detailed report. 16.24 is the maximum drawdown. And in summary, just do it again at the maximum drawdown. We assume that's the high point there down to that low point. 1573, so close to 1624, but I've just drawn it roughly there, but that's probably what it's calculating from that high to that low. All right, guys, I hope that's helped for those summary for those four charts. And again, these four stocks aren't too bad in terms of dividend yields, but also in terms of profitability, should you buy and sell using our strategy. That's what it's achieved. If you bought and hold, you're down about $300 for the four stocks, with $82 being the ANZ, the only one that's broken above our baseline of 100,000. All right, thanks again. I'll give you a summary in a couple of days on our regular blue chip shares and also the indexes as we move forward. Thanks, and see you next time.